Ladies and gentlemen, welcome back to the channel. Let's go ahead and get into everything you need to know for AMC stock here on this, Friday. Feels like extended weekend because not a lot of people are out there trading. And we did get some very big economic data today that I also want to go over with you. Very much recessionary. So, first things first with AMC stock. AMC broke a new record, thanks in part to Taylor Swift. The Eras tour, I don't know if I'm saying that right. Concert film raked in ticket sales revenue of $26 million Thursday, smashing records for single-day advanced ticket sales revenue at AMC. The company said Thursday's ticket sales broke the previous record of $16.9 million held by Spider-Man. Can I not speak today? No Way Home. Said Friday. Just kind of reiterates the same thing over and over again. So this is pretty good news for AMC stock. AMC stock is up 3.5%. That partially could be why you've kind of seen a ramp up in the last couple of minutes here, even as the markets have been falling basically since the open of the start of trading here today. AMC stock is back above that crucial level of $13 per share. I don't know what's going to happen. I don't know if you're going to end above $13 per share. That's really what you want to see happen. So this is important, right? There's a lot of option activity around $13 per share. Let's take a look at it. So you have 10,769 calls that go into the money at the $13 strike. And you have 9,466 puts that go out of the money at the $13 price. So if you can hold $13 per share until the close of the day today, and even in extended hours, because we do know that does count, right? Extended hours counts. If you can hold that, that's beautiful. That is great. That's exactly what you want to see from AMC stock to get a continued rally into next week. Now, with that being said, let's take a look at some of the data over here for AMC stock. You guys got to keep in mind, from Ortex, these estimates are not accurate by any means. The best thing you can do is actually just look at the official short interest report. The last one we got was for August 15th. AMC stock on these prices back on August 15th was in the mid 30s range, and you're at $13 per share. Ortex is going to sit here and estimate that the short interest is 12.5%. Less than half of what it was on August 15th, when AMC stock has dropped over 60% since then. That's not true. The short interest is 45 to 55%. I think it's even higher than what I previously thought of 35 to 45%. I don't even think it makes sense to sit here and say the short interest is 35% when it was 29.25% when AMC stock was 60% higher. So you've seen a big jump in short interest. And that's because the reverse split has caused AMC stock to not be $4 per share or $3 per share, but $13 per share. Again, on the split adjusted basis, you're down a lot from those previous prices of $3 or $4. You can see it in your P&Ls in your portfolio. So there is that. I just want to make that very clear. These numbers, take it with like a bucket full of salt, okay? Now, the cost to borrow fees, this is something that's also stumping me. I don't know what's going on here. You were seeing cost to borrow fees in the 1,000% range even after the reverse split. Now they sit at about 13.5%. Not exactly sure why. I couldn't tell you, and I couldn't tell you what the actual numbers are. They could be very high. They could be low. I don't know. Let me know down below in the comment section what you think. I don't think that matters all too much in the grand scope of things. We're due for a massive bounce, and I think that is what is coming. Now, the last couple of days have been pretty good for AMC stock. That is for sure. Relative to what we have seen, over the prior week or two, which has been very negative. This is encouraging, at least this 4% move that we are seeing today. Now, AMC stock is still on the threshold securities list. Nothing has changed here. The FTD numbers we have recently seen extended out over the next couple of weeks, well, they're going higher again. Look at this chart. I wish I could make it bigger for you. But look at this chart. I mean, come on now. The FTDs were way high in the, teens of millions, like 14, 12 million, 15 million, fell to a low of about 3 million. Now you're back at 4.4 million or 4.5 million. That is as of September 18th, the T plus 35 closeout date. That was for August 14th. So if we seen like August 15th with the exchange reported short interest, that hit the high of 29%. So even the next data that comes out, that's going to put your T plus 35 date into the end of September, you're likely to see FTDs ramp up even higher from there. That's not necessarily a great thing right now, I guess, because it's going to take time for these FTDs to be closed out of, but it could help explain kind of why we have seen the negative price action that we have seen with AMC stock as of recently. It makes sense. The FTDs and the synthetic dilution, because that's ultimately what it is, right? It's synthetic dilution. It's shares that are out there that should not be out there is basically what FTDs are. So it's already a dilutive kind of pressure. Now, I do think we are due for a dilution announcement from AMC stock, and I do think that will have a very positive effect on AMC stock considering the 60% drop that we have seen. Some people get confused, like how is dilution good? Well, dilution is not good, but if the stock has dropped 60% or 70, 80% recently, when you're fearing dilution, well, that news of actual dilution then turns into a pretty positive thing for the stock. It's going to say, hey, we've already sold the shares 80% from where they were just a couple of days ago. AMC raised 10% of its float. That's not too bad. We should cover our shorts on that news. That's kind of the logic that goes behind it in the simplest way to put it. Now, if you look at the Stocko Tracker data, you got 23,568 calls in the money, 55,065 calls that are out of the money. In the money puts at 27,000. Out the money puts at 59,000. So you are seeing more calls in the money than puts that are in the money. And this only happens as long as AMC stock stays above $13 per share. AMC stock right now is at $13.07 per share, up 4.10% on the day. A really good day so far. So hopefully this does continue. If it does, again, you want to watch that $13 price, right? That's going to be a big one. Now let's take a look at what happened with the economic data, guys. Recession? Are we still calling for that? Well, it looks like it is definitely coming. Now, the unemployment rate just hit 3.8%. You were expecting 3.5%. The prior one-year high was 3.7%. If you zoom this out, you are at the highest unemployment rate that you have seen since the beginning of 2019. We're going to factor out from this line to this line because this is all government-induced, right? The government basically incentivized you to stay home and to not work. So this is a problem. Anytime you have seen a jump like this in a short amount of time, you have always seen a recession. So not great. Now, the U6 unemployment rate, let's talk about this a little bit more. The U6 unemployment rate in the United States, which also includes people who want to work, but have given up searching and those working part-time because they cannot find full-time employment, rose to 7.1% in August of 2023, the highest since May of 2022, from 6.7% in the previous month. So, I mean, look at where we are right now. It's not great. If you look at this again on a 5-year basis, you're back to where you were again in 2019. Not so great. We did see, if we go ahead and pull up the calendar again, we did see the non-farm payroll report come in at 187,000. The prior revision revised last month down to 157,000. So, not great, right? It was higher, but that just means we're probably going to get a lot more revisions. And overall, I mean, you can't just keep adding a bunch of jobs. But when you're seeing the unemployment rate spiking to 3.8% and you're still adding a lot of jobs, now what does that ultimately mean? Well, the pool of available workers is obviously increasing, which should be good for the Fed's mandate. But then again, you're reducing the job openings, and that's the data that we got on Tuesday. Now, the ISM manufacturing PMI came in at 47.6. ISM manufacturing prices came in at 48.4. The estimate was 43.9. So your actual prices for these orders that people are making with manufacturers is jumping. That's not great for inflation. And initially, once this data came out, the unemployment rate had spiked and the jobs report was okay. The bond yields had initially went down, and now they're actually going up again. The 10-year Treasury is up 10 basis points today. The 2-year Treasury is up about 3 basis points today. So it's basically saying higher for longer, although you're getting some pretty bad data that came out today. This is not great. Potentially a problem. So that's the data that came out today. The markets, well, not liking this all too much. You're still positive by about 0.1%. But a lot of people, again, are not even active today because, I mean, it's Friday before Labor Day, right? Or this Labor Day weekend. A lot of people just clock out here on Friday. So we do have lower trading volumes, things of that nature. So something to keep your eye on. And if you are in the camp of a recession, well, look at the data that we are seeing. The auto loan delinquency rate is 3.6%. That is the highest that you have seen since 2019. Or, well, 2010. 2019. No, 2010. So very high rates here. Credit cards, same story here. 3.8% delinquency rate. You have not been this high since 2011. And consumer loans at 5.4%. You have not been this high since 2013. So it's quite a problem. Okay? Not great. So if you're in the recession camp, it looks like things are starting to break out there. Now, if we circle back to Ortex, I do want to go over some of the other numbers here. Short score of 78, $223.54 million worth of short positions currently on AMC stock. It says these shares out on loan is 25.47 million. That is roughly half of the float that is outstanding. So this shows the short interest could be 50% or even higher than that potentially. Days to cover 3.9. Cost to borrow fees, again, I take these numbers with a grain of salt. 9.56%. And utilization at 75.33%. Again, taking a look at the chart of AMC, you want to stay above $13 per share. If we do get downside here towards the end of the day or even next week, $12 per share has proven to be a big level to be watching for. You basically bounce off of $12.14 per share yesterday, so you want to watch that level specifically once you get close to $12 per share. But really, I don't see much downside from here unless we were to get some really bad fundamental news for AMC. I do think that next stop is going to be in the 20s. That's just my personal opinion. Let me know down below in the comment section what you think or where you think AMC stock is going from here. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.